Welcome to the Transparent FX Academy. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And every day on this channel, I share a lot of free education and analysis. So make sure that you subscribe and I will see you on the charts for today's analysis. In today's video, I want to speak about EURUSD. Now, why do I want to speak about EURUSD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, going down then on the lower ones. We will also check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, so the big players in the market. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for EURUSD. Now, starting on the monthly, what we can see is that the market at the moment has just broken below a quite important structure area. In fact, we know how this zone was acting as very strong support here against support here. The market has now broken below the level. And as you know, in the market, previous support, once it gets broken to the downside, is turned resistance. So if we will get the market to retest this previous support and resistance, there's a good probability to see the market provide a rejection to the downside. So we can expect a little bit of short-term bullish price action before then continuation to the downside. Dropping down on the weekly time frame, we can see how we just created a strong impulse and now the market is also creating the correction. Now, generally speaking, when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how we have a 0.32 Fibonacci retracement, which is currently lining up perfectly with this previous weekly support, which now that the market has broken into the downside is turned resistance here, creating a quite strong cluster of resistance at this area and supply that we can expect the market to reject to the downside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. Dropping down on the daily, what do we have? Now, on the daily time frame, we can see that in creating this move to the upside, the market has also printed in overextended W formation. Now, generally speaking, after the creation of an overextended W formation, you want to see the market provide a correction. Specifically, you would like to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the daily impulse. So in this case, by taking our Fibonacci from this low to this high, we can expect the market to provide a correction all the way down to this 0.32 of the Fibonacci taken on the daily impulse. And overall, we can expect a move even all the way down for the completion of the W formation at the neckline. Now, if we go and see what we have from a COT perspective, so basically what the biggest players in the market, so the non-commercials, speculators, hedge funds, etc., what we can see here is that with the last reports, net positions have been massively decreasing. In fact, we went from having 27.8k net positions all the way down to having minus 18k net positions. So we went from having a positive net positioning to having a negative net positioning, meaning that we went from having more longs than shorts from an institutional perspective to currently having more shorts than longs with 220k shorts and only 202k longs. And always remember that all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you are already checking EURUSD. So how we will be approaching this potential shorting opportunity here with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, we will be monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And only if the market will shift from an intraday bullish to an intraday bearish market, only at that point we will be adding EURUSD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be looking for a nice short with a good risk to reward and good probabilities at that point for the potential move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.